Hello, welcome to the latest webinar hosted by the NFB and Aldermore Bank. Today we're going to be talking about tax issues and the prompt payment platform. So we'll get straight into IR35. Massive changes coming in. James, do you want to try and explain them?
Thanks, Mark. Yeah, so if you'll be aware that the IR35 rules currently do exist, off payroll working there, they're otherwise known as, but the government has decided that the way they currently work doesn't work very well, and therefore is bringing in some changes which actually have been deferred and are now coming in on the 6th of April, so very shortly. And the principle is that the responsibility for who determines those workers' employment status. So if they use an intermediary, or they use their own company in order to work for you as a construction company, then the aim is to try and make sure that they achieve broadly the same contributions for national insurance and income tax as an employee. So the responsibility is now moving, and for medium-sized and large-sized contractors, it will be their responsibility to determine whether those workers their actual employment status. And of course, this could not come at a more unhelpful time. You know, we have just had a pandemic. In fact, we're still in a pandemic. We're still nationally locked down, which the construction industry has done a fantastic job of responding to, but has nonetheless taken a huge hit in output at the beginning of last year. It has started to build back, and we are seeing some growth, but that is absolutely tentative. And so now unfortunately, construction businesses are likely to have to face this new administrative burden. But it absolutely is important that you know about them and that you prepare for them. And our message is: do not get caught out. Now we have a tax advice line that we provide as part of our service offering to our members, which I am very much encouraging you, if you're an NFB member, to pick up the phone and speak to if you have any worries about IR35. In our members area, there's a documentation on IR35 and what the changes mean, and we are hosting a separate webinar to this on those changes as well. But from our point of view, and we've made this very, very clear to the government and to the Treasury, we don't think that now is an appropriate time. What with the changes of Brexit, what with the response to COVID, we could have done with a bit more time to allow our construction businesses to adapt to these new rules.
And then they begin reverse charge VAT as well. I know we've got a campaign to try and stop it again, but we have to be prepared. So what do our members need to be doing?
Yeah, absolutely. So this is something that's coming in even sooner. This is scheduled for the 1st of March this year, and this refers to who is responsible for paying VAT. And generally speaking, the majority of our members and the works that they do, and whether the rules on reverse charge VAT apply, depend on the type of works that you actually do. And again, we've got documentation on this in our members area, a webinar that we're running, and again, our tax advice line is there for assistance. But it's who effectively pays for that VAT, and the big change will be is that it's passed on. And in some regards, you might think, oh yeah, that's good, but actually, what it's doing is it's taking quite a lot of cash out of the supply chain. So tier one contractors might not see too much change to start with, because they effectively provide their services to the end user. But the supply chains will notice the difference, because they will not be being paid that VAT, because the reverse charge VAT rules apply. Now, we could get deep into this today, and it's probably not the opportunity to do so, but again, our message is: don't get caught out. Be aware that these come in on the 1st of March. They don't come in the new financial year. They come in this financial year. So you must really be aware of them. So please, head over to our website and have a look at what we've got on offer, and don't be afraid to give our tax advice line a call, because it's not as straightforward as perhaps I've alluded to. There are some complexities. And again, a terrible time. As you referred to, we have been campaigning very, very heavily to have this at least delayed, if not deleted. We don't believe that the fraud in the sector that the government talks about is, firstly, as existential as it says it is, and secondly is so bad to the extent that it should take this level of cash out of the construction sector at such a difficult time. So we've made our representations clear in the construction press, to the Treasury, to the Construction Leadership Council, you name it. We've tried every button, but absolutely, you must try and get ready for this reverse charge VAT, and the government has told us it really is coming this time, because it was due originally in October 2019, and here we are almost in March 2021. So please be ready for it.
Again, looking at my area of the market, which is contracting businesses, these changes have two impacts, and the first is about compliance and regulation. And basically, what they need to do is get their heads around the changes and make sure they're on top of them. And it's doing things like it will be, changing the setup on their accounting system and things like that once they understand what they've got to do. And we're now left with a short time frame in which to do it. And I'd say probably, well, I'll speak for most of my clients. This sort of stuff isn't their forte. They're really expert at other things, and it's that thing of, particularly in the SME space, of sort of looking for that help that's available from advisors, and as James alluded to, with support from the NFB. But it's sort of that thing of getting on top of it and not being caught out afterwards with potential of getting it wrong. The second aspect is obviously the detrimental effect on cash flows of businesses and their working capital. And again, the first one, and we've been sort of intermittently putting articles out about this, and in both of the previous run-ups to the VAT change, and then it didn't happen. But saying the first thing is you need to plan for that as well, and understand what the impact is and what you need to do. And obviously, from what I do here at Aldermore, we are here to help in that situation. So if this changes your working capital situation, and that you're going to need extra resources, there are people like ourselves out there who really want to support working capital funding in this sector.
Okay, thank you very much for that. Another long-standing NFB is the prompt payment code. James, do you want to talk us through?
Yes, and actually this comes incredibly timely. Prompt payment is a problem in the construction industry, and it's so frustrating that it is, because it not only gives the industry a bad name, but if you're listening to this, you'll know that the construction industry is made up of predominantly SMEs who rely on that prompt payment for the cash flow purposes that we've already addressed. We have members who experience this time and time again. Prompt payment is good practice. It's good for business. It's good for the construction industry. It's good for relations. It avoids bad feeling. It avoids contractual disputes. It's just so important. And I think, John, you're going to touch on the changes to the prompt payment code in a minute. But construction industry operates on such tight margins anyway. We need prompt payment to become absolutely the norm. We've been pushing for the government to do more on this. He's taken some steps forward, which I think you're about to hear about. But we still need to go further, and we still need to get this right, because we haven't as an industry. It's very, very important to our members. And if it's important to our members, it's important to the industry at large, and it's indeed important to the economy at large as well. We really don't need businesses failing because of prompt payment malpractice. So, but I'll get off my soapbox now, Mark.
Yeah, I was just saying, this is again, you know, the businesses I fund, obviously, their customers paying them is the lifeblood of their business, and this has been a perennial problem over many years. Now there's obviously the issue of prompt payment and their customers not paying them, but I also think there's potentially a second issue in terms of the contractor who's doing the work, making sure they're aware of all their contractual obligations and all their contractual rights. And again, it's around that thing of, if payment gets delayed, make sure you know what you need to do. If you go on site and the area you're going to work in is not ready, make sure you know what you have to do under the contract, and that protects you down the line. But it is very interesting, and if we watch the trends through the pandemic, we saw across our portfolio customers taking a longer time to pay in the first stages of the pandemic, and it's coming very much back to how it was before the pandemic, which, you know, reflecting James' comments, is probably not that brilliant anyway. But it is that thing of it's sort of that thing of a perennial problem, and it does, you know, the industry needs to focus on it. However, it's interesting at the moment, there is another issue which we are seeing, which is, should we say, some of the main contractors sort of taking a fairly hard line over delays to project work and delays that are caused by COVID, and that seems to be a bit more of a concern for some of our clients at this time.
In terms of our area, we actually do fund development. So we have an in-life team that looks after the stage payments on of any development drawdowns, and we've set that up so that we're really slick in terms of how quickly we pay, James, which is hopefully helping the reputation. And on average, it takes 0.7 days for us from QS drawdown signed off to actually pay money out to those contractors. So we take that very seriously. And during lockdown, we amended our processes so we kept the speed of that happening. So whilst QSs were going out, we may not have been, but, you know, taking photographic evidence or video evidence to pay away against that. So I think we've learned to adapt with some of the challenges, but recognise, to James's point, the prompt payment is so important to help the cash flows of those that are working on site.
And
Brilliant.
I should probably, having dropped you in it, John, unfairly, the changes to the prompt payment code mean that where previously those signatories, and there's almost 3,000 signatories to the prompt payment code, had up to 60 days to pay small suppliers. That's now been reduced, although they should have aimed for 30. That's now actually been reduced to 30. So 95% of all their invoices from small suppliers should now be paid within the 30 days, which is great, or they will be named and shamed effectively by being publicly removed from the register. So that's obviously, you know, a very, very important step forward. And just to give you a bit of context, and I wasn't joking when I said a lot of companies do go to the wall because of this, the Federation of Small Businesses estimate that up to 50,000 small firms close each year. Now, that's not only the construction sector, but like I said, there are a lot of SMEs in the construction sector, but 50,000 small firms closing each year because of poor payment practices and overdue invoices that's just not good for the economy. It's not good for anyone. So it's really important that we get this right going forward.
Vital stuff. Very vital stuff. Okay, that concludes today's webinar. Thanks everybody that's watched, and thank you very much from the panel.